Hey everybody, this is Jose Blasco. How are you, my friends? Today is February 2nd, 2023, and we are getting together to go over trading. This is our trading and review session. My name is Jose Blasco, if I haven't said it, and I welcome you to join the SpeakUp app that you could download from web.speakup.info, or you can, without downloading the app, you can actually use the web browser, and just on that same website, web.speakup.info, you can connect with us and have a private chat. Since this video will be then posted online, but the chatting will be kept private between us, the ones that are connected live at the moment. Okay, so before we get started, I wanted to make sure everybody has managed to connect with the app. So a quick message on the app itself to say hello would be appreciated. So I know you are connected. All is good. We are ready to begin and ready to do some trading as well as some questions, some answers. Again, this session is about trading and review. So happy to trade, obviously, but also happy to listen to you so we can again provide answers to the questions that you may have. So I would need some feedback from you guys on the chat room. Again, the room key is 03150, and you can use the SpeakUp app that you could find on the website web.speakup.info. So thank you so much. Very good, Joe. I see you. How are you, my friend? This is fantastic. Thank you, guys. Very good. So let's begin. Let's begin with our session. I will get rid of the text on the screen so it's less busy on the screen and we can focus on the charts, on the trades, on the markets. And again, while I'm waiting for you guys, because again, these sessions are designed for you to be the protagonist, not for me to be the protagonist. So while I'm giving you time to type questions, observations that you had during the week, anything that really you would like to talk about in the markets. This applies to all assets. It doesn't need to be options. It could be futures, it could be Forex, it could be crypto, you name it. So while you are probably typing some of those, I'm going to start doing a little bit of market analysis with the SPY to understand and define the current market condition that we have in case there is something specific for me to point at. So we keep it in mind during our trading. Of course, remember that, and you can read the disclaimer on the bottom part of the screen. My role is not to be a financial advisor, and I'm not one. My role is to help you and guide you, and the best way for me to do it is to just share with you what I do myself in my trading, which doesn't need to be what you do when you trade. We are all quite unique, isn't it? We all have specific trading plans, but hopefully my example could serve as a framework for you guys or an inspiration maybe, and help you to develop yourself. Okay, so anyway, with all of this said, and again, I'm counting on you guys to be interactive in the session. Okay, this is how these sessions have been designed for. And by the way, later I want to share a couple of things as well about different type of sessions that we're gonna start doing as well. Okay, but for now, let's begin with a little bit of market analysis. And I'm noticing as well my computer, for whatever reason, is showing CPU 98% up. So my computer may be running slow for some mysterious reason. So if things are moving a bit slow, apologize for that. Okay, but anyway, so let's begin with the market analysis, and the first thing to do here would be to focus on the climate, of course. And what do we see when we look at the climate? We are in a confirmed climate to the upside. Now, the statistical duration of this climate should be 4. The current duration of this climate is 9. So we are talking about a market that has been moving in a very strong fashion. Not only that, from a max distance point of view, from a volatility, from a price extension point of view, if you want to call it that way, 0.67 would be a 2 standard deviation of what we normally see when that market is moving to the upside. In this current market cycle, in this current climate, we have reached a level of 172 at the maximum. We are currently 171. So this is indeed a market condition where this market is very, very much stretched. Statistically speaking, we could say that is not statistically sustainable, and therefore we may see very, very soon a very sharp turn to the downside on the S&P moving down. If we were to look at the 55 in the time frame, we may actually even see that we are approaching UFOs there that are red color UFOs. So those UFOs may turn to be very powerful, reversing the market all the way. Now, all the way, what does it mean? The world is ending? No, of course not. It means that we may experience a climate of 4 candles to the downside. That would be a normal thing to happen. Again, the prior time we went red, it was 2. The prior time it was 1. The prior time it was a longer duration. The prior time was 5, 2. So again, statistics are statistics. Sometimes they are met precisely. Sometimes they are not met at all. That's what statistics are, isn't it? But again, it's a very powerful reference for us to keep in mind. So when we trade, we are not biased, or we are not doing some sort of a trading action with a big position size when it's way too late in a move. So again, the climate is keeping us more, calm, if you wish, and understanding of where are we at in this particular wave, in this particular expansion of movement of the markets. Where are we at? Are we in a position where it's likely going to continue, or it's now ready to change direction? Okay, so this is what the climate is helping us to understand. Okay, so we are in a position where we need to be very careful. If you are long, again, taking profits probably would be a good idea given what I just explained. But at the same time, as I discussed, I remember in the prior month, where we saw buyers coming into the market when the line crossed, the blue line crossed above the gray line, being the gray line the implied volatility of the puts, and the blue line the implied volatility of the calls. At this moment in time, we knew buyers were in the market. We just didn't know at which price points. Okay, so the safe action was to wait for a clear change, confirm change of climate, and then start acting on getting on board. Sorry, my computer is really moving slow. Getting on board, for example, at this point in time, and just enjoy what's happening with the climates propagating to the upside, because we know buyers are on board thanks to what we see on the bottom part of the screen. So what do we have at this moment in time? Where implied volatility for the calls is pointing at 1833, implied volatility for the puts is below that, 1667. So, my friends, we have buyers in the market. Same comment that I had for you guys last month when we were looking at the market. They are buyers in the market. Okay, now, while they are buyers in the market, we are reaching a stage of statistical unsustainability. And we've seen that before. We just reached candle number 9 in this particular climate. Should have been 4, 5, and change. That would have been a normal thing to expect. We went beyond normal. Well, we've seen in cases in the past where now from 9 it went to 20. So could we have a crazy move to the upside that doesn't ever stop? Yes. Now, is it likely to happen? No. So therefore, caution here. Again, planning on trades in the opposite direction once the climate is confirmed would be probably the safest approach to trading to the downside, instead of expecting it to happen right now just because I said. And we have a market condition that suggests so, but we haven't had the confirmation of this happening, and therefore jumping on board a bit too soon, maybe, as I just said, a bit too soon, even though we have red UFOs on the right, isn't it? At 417.58, isn't it? And these levels may be very relevant. Okay, but again, safer bet, wait for a change of climate. Again, sharing with you guys how I think about the markets, how I trade myself. So actions to be taken. Okay, so let's say that you have, I see your question, Joe, coming back to you in just a second. Okay, so again, actions to be taken. So let's say you have a portfolio where during this past month you have accumulated a collection of stocks. You are in multiple bullish trades with or without options, and many of those trades are in profit. Okay, well, probably it's time to close some of them. Probably it's time to either enter as a hedge some short positions in case the market falls and your long positions get hurt, at least to have some positions that make some money on the way down. So again, this is the type of action that could be taken, which is in line with the market condition I just described. What else can we do? Well, we can stop taking more trades to the long side, even though the climate is blue, the climate is up, and start doing some non-directional trading. Okay, now, non-directional trading, we need to be careful which type of, because the classical type of non-directional trading that most people would think of when they use the term non-directional trading is going to be either selling strangles or selling iron condor, selling premium. But what has been happening to the implied volatility of the S&P is been going down, right? So if we look at the VIX, do I have it here? No, I don't. So let me type it manually. Okay, so VIX. So if we look at the VIX, the VIX has been going down by a lot. We are talking about 17. This chart says it all in it. We are all the way on the bottom right of the chart. And therefore, what happens? The majority of stocks in the S&P 500 market which presents volatility conditions that imply cheap options. So selling cheap options, it's not a good idea, isn't it? Selling cheap is never a good idea. Now, can we find unique opportunities where maybe a handful of stocks out there may provide us with opportunities with high volatility while the S&P overall is down? Yes, of course. But those are going to be rare opportunities, and therefore we may struggle a bit to find those. You may need to spend a bit of time with research until you find the opportunities that match what you're looking for. So again, classical type of non-directional trade that we have taken in past sessions, and again, happy to look for one of those later. It's double calendars, for example, which benefit from non-directional price movement while you collect time decay, but also it increases greatly the profitability as the volatility goes back higher, which is what is expected when the VIX gets low. When volatility goes low, it is expected for the volatility to tend to revert back to its mean and therefore rise. Therefore, non-directional strategies with positive vega, such as double calendars, would be valid techniques on how to play a market condition of this sort, where it's not time to go long and it's too soon to go short, right? Maybe you want to do some non-directional, and by the way, if we are right and the market falls, typically volatility rises. So those non-directional trades, those double calendars may work very well. But again, we need to find the right setups. Okay, so this is the rationale behind the market analysis. Hopefully this is making sense to you guys. If you have a different view, or you have questions, or you have additional comments, feel free to interact. As I said, I do not need to be the protagonist of this session. Okay, this session is certainly designed for you, and I welcome everything and anything coming from you guys. Talking about that, Joe has a question here. How many bars do you usually format on your charts? My UFOs on the 55 is a little above yours on SPY. So if I show you my format settings, you will see it here in a moment. And the answer to your question, how many bars I use, the answer is it kind of depends. Okay, I like to have a decent amount of bars, so the statistics that represent my UFO performance stats are representative. Again, my computer is running very slow today. I know. I don't really know why my CPU is pointing at 97% again. So that is, in this particular case, I got 1,000 bars, which, to be honest, is a bit low in this time frame. I'm not sure how I got this number there. Normally I would have a little bit of higher number here. You've seen me in the past use 1,597, which is a fib number. I like very much to use fib numbers for everything I do. So that's one valid option. 2,000 bars would be fine. Again, when using intraday timeframes in general, you would want a number which is, a few thousands, I would say. So that way, the statistics that you get would probably represent how well the UFOs have been performing across various trending conditions. Okay, if you look at 2,000 bars, back in time, so probably you had times where the market was going down that day very strong, other days where it was going up very strong, other day where it was going sideways, not doing too much, etc., etc. And having a decent quantity of bars would represent that well. So that would be ideal. Okay, now different story, and this is not your question, Joe, but it's related. A different story is, for example, the chart on the left, where the only thing I'm looking at is the auto climate. Right? So if I show you, I'm sorry, really, for my computer running so slow. I don't know if it's a Windows update or something's happening, but it's really wrong timing for this to happen while we are live. But anyway, I guess it's live. So let me show you my format settings for the chart on the left, where my main concern with the chart on the left is auto climate. And notice that here I am only using 300 bars. Okay, I don't need more than that. Why? Because again, you could read stats that go very far in time, and I'm not saying this would be problematic, but you may pick up a bit too much of statistics on the climate that have to do with market conditions that belong to a complete different cycle. And what I mean by that, I'm not talking about even Elliott waves or market cycles from a normal point of view. I am actually talking about some patterns that we see in the markets where, for example, beginning of the year there is some particular bias in the markets. Fund managers will go in with different amount of quantity of funds to either go long or go short, and there are times in the year where there are very very large bets out there that create some sort of patterns, okay, in price movement or what may be happening that year that are significant, okay. And in that sense, if you go back in time, more than that, you may be actually getting statistics from prior cycles. If you think about in a daily time frame 300 bars, it's a little bit over a year, okay. 1 year is 252 candles, right? So that would be 1 year. So 300 is a little over 1 year, isn't it? So I'm okay to do that. Also, I like to make it coincide with 300 because this is how we have it programmed on the matrix. So when you are scanning for auto climate conditions on the matrix, it's actually looking at 300 candles back, following the rationale I just explained. So that's why we use that number. So, to make it coincide on the charts and on the matrix results. So it's a good idea for auto climate to use 300, especially if you are planning to use auto climate applied to a daily time frame. If you're going to apply it to smaller time frames, of course, you can certainly increase the amount of bars, and the prior rationale I gave you for the auto UFOs would also apply to the auto climate. Okay, so long story short, summary of this: daily time frame for auto climate 300 is perfect. Auto UFO I still would go for as much as possible, because again, on-field orders is something that is not depending on cycles really, but market trends, volatility, expansion, compression of price, all of this does depend on market cycles. So it would be better for auto climate to be a smaller number if applied on a daily time frame. For lower time frames across the board, a greater amount of candles would be better, because now we are relying just on market behavior that have to do with something very repetitive, which is the time of the day, right? So like every day at 9:30 in the morning, the market's open if it's New York time, and 4 p.m. New York time, the market's closed, right? So, and then people go to lunch at a certain time, and even though this is a little bit old school thinking in the sense that these days it's all about computer trading. It's not like there is no volume in the market because people go for lunch. Okay, that was in the 60s or the 70s, maybe the 80s, but not these days. But at the same time, those computers are programmed in ways that they act in a specific fashion, unless they are triggered by some event that is happening at some random time in the day, and that day the market behaves totally different based on other days. But there is a little bit of a pattern, if you wish, on how things happen per hour, right? The way the market moves from 9 to 10 a.m., it's different that from 10 to 11, it's different from 11 to 12, and so on, right? So therefore, capturing more statistical data with auto climate or auto UFOs, and therefore loading more candles in the intraday timeframes, makes a lot of sense because of all of those reasons. So this is my long explanation for you, Joe, which hopefully gives you something to think about, and helps you to justify the numbers that you choose for yourself in your own setups with your own computer, with your trading plan, in a way that is compatible with what you do, and uses a little bit of my experience here on what I've seen work better throughout the years. Good. So what else, my friends? How are you doing? How has been trading recently? What have you been trading recently? We are looking at options right now, but also I'd like to minimize top for a moment, and also get into Ninja Trader for a moment. Maybe could be a good idea to think about or discuss a little bit of intraday trading, maybe with futures. Not sure if you guys are keen to do that, or would want to do that. I certainly love in the chat box. You guys let me know. By the way, if you joined the session late, you may be wondering, so what's the room key? Let me highlight this one time. Okay, so you're on the screen. You have it. Okay, I'll just wait a moment in case you joined the session late and you are now getting into the website, getting into the app, typing the room key. So that way you can interact with me and answer the questions that I ask you, but also give me questions so I can answer you. And that way we can have a proper conversation. By the way, while I'm waiting for you guys to do this, I'm gonna show something here. Give me a moment. I'm just gonna bring a web browser to the screen. Okay, good. So wow, our website, it's my computer is really, really, really running. So just give me 1 second, guys. Okay. Okay, cool. So the reason why I'm bringing this to the screen is I want to scroll down all the way to the bottom, all the way here where it says trader meetings. Okay. And you may have seen this before. If you definitely, if you have been in these sessions before, you have heard me talk about this before. If you are new to the sessions or you're watching this recorded, maybe you don't know what this is. But let me open it and I'll come back to show you what it is in a moment. Because I also want to open in parallel the calendar. Okay, so I just opened the meetings here. Okay, so let me open the calendar, and I want to show you that starting later this month, to be precise, starting on the 20th of this month, we're gonna start doing something called the UFO Traders Open Meetings. Okay, we're gonna do that twice a month. So if you look at March, you're gonna see that twice per month, and it's gonna be twice per month every month. And so, what are those UFO trader open meetings? Okay, so maybe a good way to explain it is just to show it to you here, and we can talk about it. So basically, the idea is that we're gonna get into a trading room where instead of it's a webinar style like this session today, where I'm the one sharing the screen, I'm the one looking for trades, I'm the one answering your questions and so on. Not that I mean to be lazy, don't get me wrong, but instead of me being the one doing the whole thing here, the idea here is that we're gonna be doing some teamwork. Okay, so you guys will have screen sharing capability. Everybody will have screen sharing capability. Everybody will be able to turn on the webcam. Everybody will be able to turn on the microphones. The sessions will not be recorded. The sessions will not be posted on any social media or any YouTube channel or anything like that. It's gonna be fully private for our eyes only. We're gonna get in that room, and the idea is that we're gonna be sharing screens, discussing trade ideas, executing them, and it's not gonna be only me. It's gonna be everybody. And maybe, for example, Joe, I'm gonna pick your name since you asked a question earlier. So maybe Joe is gonna be like, "Hey, Jose, I found this trade on McDonald's. It's a calendar spread. This is my setup. What do you think?" And for me to understand your setup, you're gonna be the one sharing the screen and going through your trading platform and showing me exactly your entries, your exits, your strikes, everything else. And then maybe I don't need to share my screen, and I'll just make a comment about it, which may be positive or negative, or may have a suggestion built in or not. Maybe just full approval. Your trade looks perfect to me, and that's it. Uh, or maybe there is something that I would like to show you out of as a consequence of the trade that you shared. Maybe there is something I would like to teach you at the moment in time. So we improvise a mini lecture within the trading session there, and then I may share my screen and we may do a little bit of that too. But the idea is that these are sessions that are collaborative. They're going to be open for everybody, and everybody can come and join and either watch us trade or trade with us. But definitely, the idea here is that you guys are ready to share screens, okay? Because if this would be a failed project, if you wish, if everybody was to come to the UFO traders open meetings, and instead of a meeting, everybody's looking at it like it's a webinar, and everybody's expecting whoever the coach is, which I would say the majority of the times is going to be me, but it may be other coaches as well. So whoever the coach is gonna be just planning trades, and that's it. And therefore this becomes like a regular session. So the plan is it does not become a regular session because we want to help you to do more and better in your trading. And one way on how to do that is to help you in your own process instead of having you watch us and then we don't see you. So I want to see you how you plan your trades, because I may be able to help to point in certain directions to make your trading better. Okay, so the idea is that we do it all together as a team. We keep all each other accountable. I may plan a trade and you may realize I made a mistake, and you actually tell me. That's fine, okay, because we are human, and there's no point of not looking at this project as in a humble manner. The market is the boss. I'm not the boss. Any of our coaches are the bosses. The market is the boss. So it's all about getting together and joining forces. Okay, so hopefully you like this idea. I'd love to hear your comments on the chat. And here's when you come to the meeting room, right? So it looks like that, right? And the only thing you need to do here is really to type your name, okay? And the moment you type your name, so Jose. Wow, it's unbelievable. My computer is really not working well today. I'm so sorry about that. It's not pleasant. So the moment you do that and you join the meeting, so now you are in the meeting room, okay, where if I scroll down here, the meeting room has capabilities for you to share your screen, for you to turn on or turn off your webcam, for you to mute or unmute yourself, for you to use a chat box, for you to raise your hand and say, hey, I want to talk, for you to see who else is in the room and see the participants, etc., etc. Okay, now this cannot be recorded, okay, and won't be recorded. And and this is how you exit. You click on the red button and then everybody's out, okay? And that's it. So it's a meeting, it's a trader's friends meeting, if you wish, that we're gonna schedule so we can assist you more on not being only a couple of you, but hopefully it's gonna be more. And also within the process you have someone to guide you as well. It's not you guys, but there will be a guide, which in this case it's going to be me. Okay, cool. So anyway, so I don't see additional questions on the chat box. Okay, so maybe something I could do, since I got Ninja Trader here, is to maybe have a little bit of a recap of some of the key elements of what is it that we do when we plan a trade intraday, trading futures, and we plan to be directional, okay, without options, just using outright futures contracts to either go long or go short. Okay, so how can we deal with this? What can we do to make this work well for us? So I'm gonna explain things that some of them may be familiar, but again, this is gonna be a little bit of a summary or recap. And by the way, let me get rid of the text on the screen so you guys can see things better. I'll get rid of the disclaimer. I think you guys had plenty of time to read it early in the session. So I will get rid of the disclaimer as well, so you can see the bottom part of the screen with more detail, okay? So now, what do I have on the screen? I have the S&P 500, okay? How do you know? The symbol up there is ES0323, which means this is the March contract, okay? Now, the first thing that we do when we trade is to look for a climate condition, isn't it? Because if the climate is either too exhausted or not confirmed, so trading in a specific direction without having that ingredient in your favor, it basically puts you in a situation of starting with loss. And could we be lucky and make some money? Luck, yes, of course, but it's a bad beginning, isn't it? So one very smart way to check your climates, okay, and I'm just gonna switch workspaces for a moment. So one very wise way to check for your climate is to turn on the climate in a table format. So here, for example, I'm looking at multiple climates, NQ, ES, YM, CL, GC, and the Euro futures. All of those climates here on the top are currently plotted on a 15-minute time frame, okay? How do I know? Well, because I created myself a tab that says 15-minute climates. So that's how I know. If you didn't know, you would just right-click, okay? And as you right-click, you would go find your columns, and when you look at your columns, okay, you would select, for example, your auto climate, and then here you can see the time frame that you're using, 15 minutes. Okay, you can have each column could be calling a different time frame. In this particular case, the way I have it set up is that each column is set up to call the 15-minute time frame. Okay, so notice that if I was looking at futures right now without even loading charts, I know this particular market, the YM, okay, is near an EMA in an early stage, okay, in an early stage where the maximum distance is 193, and so far it's been running up to 0.59. So in other words, it's potentially not a bad condition for me to trade. So that's how you save time yourself in trading, because again, one of the, at least I trade step one when I go directional is to actually to look at the climates, right? So instead of looking at charts, you can just look at it in a table format. So that's a powerful thing to be done. Okay, but now let's say you don't trade too many markets, you only trade a few markets, and when you are trading those markets, really you don't want to be distracted with opportunities in other markets that you may even trade. So maybe this table format, this is called the market analyzer in NinjaTrader, isn't it? So this table format is not something that is important or relevant to you, but maybe the alerts log is. Notice how the alerts log is giving us indications when, in this case, the Australian dollar, US dollar, let's go for it, okay? When that particular market, it's approaching the EMA, okay? So when any of those markets are approaching the EMA, you get an indication. So maybe this is one way for you to organize your workspaces and your various trading monitors, where you are looking at various markets, but just not to miss opportunities, you have this sound alert and visual alert that tells you, hey, this market is approaching the EMA, or for example, when there is a change of climate too. So all of this is set up actually on the chart. Okay, so you have your auto climate here in the bottom part of the chart. So if I right click and I go to indicators and I look at my auto climate, which is here, okay, I have all the parameters, and notice here that I have selected climate change alert condition and ATR proximity alert condition. They are both check marked, this one and that one. So those two check marks are going to trigger alerts on the alert log window. So you may want to open the alert log window, and now when alerts are happening, either alerts because the climate has changed or because price is getting close to an EMA. Which EMA? The one you have set for your auto climate. The one by default is 9. Could be anything really. So once you have set all of that, so you will get those alerts, which will allow you to monitor the markets with less stress, not to miss opportunities, and things of that sort. So again, step one, which is about checking the climate, could be actually done in different ways. It could be done with the table, it could be done just by waiting for alerts, or of course you can also read the indicator itself on the screen, which is what we normally do, isn't it? Where you have a blue and thick dot, so the climate is confirmed, and then you look at the statistics here. You have your max distance as well as the count, which is the same information that we have on top as well, isn't it? And that information will basically confirm where you are at. Okay. Now, what else do we do? Okay, when it's time to trade, let me go back to you for trading. Okay, so what is it that we do when it's time to trade? So when it's time to trade, what we do is that we are waiting for price to come in. So this is the Aussie dollar, okay, because I have it linked. Okay, so this is the Aussie dollar. We saw earlier that it was approaching the EMA, right? So it's right there approaching the EMA. The climate condition is blue. Okay, 2 out of 6, 0.59 out of 132. So as long as we have a UFO, it's time to take a trade. Okay, as long as we have a UFO, it's time to take a trade. We can do that with other markets as well, because earlier I mentioned to do futures. So we also saw the YM, the Dow Jones Index, right, was potentially in a good situation for a trade. So I'm just gonna load it. Okay, market data is loading. You can see here, loading, right? So All the UFOs will be on the screen in just a moment. Data is being downloaded on the internet at the moment. So come on, do that for us. Okay, so I guess since my computer was running slow, the data is coming slow as well. So we'll be patient. We're traders. That's what we do. We wait. But anyway, while we wait, I'll be looking at the climate down here. And again, the climate is confirmed. Price was approaching the EMA. We saw that earlier for the Dow Jones, isn't it? So we are there. Okay, there is an EMA which is currently trading at 34,038. Okay, notice how I have that line. I have that line 34,038 right here. Okay, so I'm just waiting for my charts to update. They have not updated yet. And by the way, on the right I got volume charts and tick charts. Okay, and because what I'm trading is the Dow Jones, I am changing tab to YM because the volume chart I use is 377 and the tick chart is 233 for intraday trading. Where if I was to use the S&P, I would be using 1,597 ticks instead of 233 ticks. And why is that? Well, because the Dow Jones receives much less trading activity compared to the S&P, and therefore the timeframes need to be adjusted accordingly. Okay. So what do we have? Actually, we kind of missed a trade here. We had this UFO. Actually, this is the S&P. Why didn't it load here? I'm still pointing at loading. So the market data is coming very slow for whatever reason. I guess we'll have to wait, my friends. Okay. But anyway, if there was a UFO here, right? Notice how we have this line, horizontal line pointing at 3405. Sorry, 34035, which is the EMA, right? We have the EMA plotted as a horizontal line on the upper charts, okay? And if there was a UFO that was enveloping the EMA, right, and price comes to here, we would take a trade expecting it to bounce and to continue the climate higher. That would be the expectation. That would be the trade action that we would want to take, okay? But I am struggling with the market data being downloaded for whatever reason. Still loading my two charts on the right. It's taking really forever. So yeah, it's not plotting what I needed to plot yet. It's still plotting the S&P. But anyway, so maybe I'll move to the S&P. Okay, maybe I'll move to the S&P. Here we go. And yeah, so the EMA with the S&P is a bit lower. Yeah, I have a problem with my machine and with internet, and the whole thing is low today. Now I changed the charts. Okay, now it updated below. Okay, great. Still loading above. Okay, forget about it. Anyway, so let's focus on what I'm saying. Step one, you want to look for your moving averages, right? Sorry, let me rephrase that. Your auto climate, and you can do it in the format which is visual, which I just explained a moment ago, or you can do it with the table format or with the alert log. When it comes to finding your UFOs, in the methodology I use, in the methodology that I teach, I do have conditions. I want the EMA to be enveloped by the UFOs, and that's take a trade. Well, another way to also represent your auto UFOs, similar to what we've done with auto climate, it's to actually use the table format that I mentioned before, but instead of inserting auto climate, here we are inserting the columns that belong to auto UFOs. And the moment you do that, you end up with something like that, where you got the sell UFO, the buy UFO, which are colored in red and green. I guess that's obvious. And you have the values there, and then it tells you with ATR multiples how far are you. So, for example, on the Euro futures, we are 3.62 ATRs away from the UFO on the 15-minute time frame. Okay, that UFO at 10891, which is that UFO at 10891, is 3.64 ATRs away. In other words, if for price to come here, it's going to take 3.64 ATRs of that particular time frame, which is the 15-minute time frame. Now, if instead we look at the red UFO, which is 10955, which is that guy, So notice how the ATR is negative, which means price is inside the UFO. Okay, we are not at a certain distance away from the UFO. We're actually inside. That's why the ATR is a negative number. So again, let's say you are looking for markets, and here you could load, a whole add instruments, and you can add to your table, the whole S&P 500 list of stocks. Okay, so now you can have 500 stocks or whatever symbol, select all, and that's going to add them all to the table. I'm not going to do it because my computer is running slow, so that would really kill it. So I'm not going to do it, but you could do that, and then you are basically scanning for all stocks and see how far are you from those UFOs. And maybe you're looking for opportunities. Earlier I mentioned, let's say you have a portfolio, you want to enter a hedge. So maybe you're looking for opportunities where markets are already trading inside UFOs. Okay, so you could do that in whatever time frame, the daily time frame, the weekly time frame, whatever you'd like. So you can find those opportunities and enter hedges using those particular stocks that are already providing you the market condition, which is the one you're looking for. Okay. Again, all of those are tools to save you a bit of time. Okay. Now, since we're talking about this, there is something else that I would like to discuss with you guys, and maybe this is how we're gonna call it the day. Okay. So something that I would like to discuss with you as well, guys. Talking about the UFOs on the table. So let me go ahead and open a new tab here on the Market Analyzer. And what I'm going to do is I'm going to open a template. I'm going to load a template. And what I'm going to do is I'm going to load, for example, in a daily time frame, I'm going to load all the ETFs that produced our SPY ETF, which is made of all the sector, all the select sector SPDR ETFs. So I'm going to load them all here when I'm talking about XLF, XLE, etc., etc. So I want to load them all. Okay, and again, I apologize for my computer not behaving today. Yeah, not too nice. So anyway, so I have here all those select sector ETFs. Okay. And here, notice that I have done something special. I have done the same. I got the UFOs and the distance to the UFOs. It's the same. It just happens to be ETFs instead of futures. But then, if we look at the properties of my market analyzer, I have selected that I want to show the total row. Okay, I have check marked this guy. Okay, and this creates this total row on the top, and total means that there is an addition. Okay, there is an addition. So when you look at each of the components of the S&P 500 per sector, and you look at how far they are from their UFOs in a daily time frame, and then you add it up. So it seems that from the sell UFOs, we are 10 ATRs away if you add them all up. Okay, of course, you can also, if you wanted to have a different type of estimation. So we are talking about, we got 2, 4, 6, 8, 10, 11 ETFs here. So we are 10.12 ATRs away divided by 11. So we are, as an average, close to a 1 ATR away from all those ETFs to start hitting their UFOs one by one. So what's going to happen if all those ETFs are close to a UFO? Well, then you're going to have a lot of selling pressure in all sectors across the board, and therefore what's going to happen to the S&P is likely going to go down, right? On the other hand, we look at the buy side and notice that we are further away from the buy UFOs. We're 30 ATRs away. If I add them, if I divide by 11, it's like 3 ATRs away. So we are like 1 ATR away from the sell UFOs as an average, and we are 3 ATRs away from the buy UFOs as an average. In other words, the buy orders are very far down, where the sell orders are way closer, right? So again, is that in line with the market analysis that I did before when I said that we may be about to see the markets to turn and go back down? We may have a little bit of an extra spike of price going up just to hit all those UFOs in the various sectors, and then it's going to be a pretty strong move to the downside on the S&P. Again, nothing to be afraid of because there are UFOs below, 380 hours below. So this is going to be your 3-4 day moves on to the downside that auto climate statistics suggested on our beginning analysis of the session. Now you tell me, look, but I want to be more specific than just sectors. There is a specific group of stock that I'm very interested in. Maybe I care very much about Dow stocks. Okay, so you want to know what's happening to the Dow index. Okay, so now you load the 30 stocks. I did this wrong way. I wanted to load the template. Load the template with my Dow stocks, not on the 60 minutes, on the daily time frame. Okay, daily time frame, Dow stocks with totals. Have a template created for that. So if I load that, this is going to replace dot symbols, but also insert auto UFOs, insert the ATR distance to the UFOs. The same thing we just did with the select spider ETFs. We're going to do it now with the 30 components that make up for the Dow Jones Index, which are Apple, Amgen, American Express, Boeing, Caterpillar, Salesforce, Cisco, Chevron, Disney, Dow Chemical, Goldman Sachs. I mean, I'm just reading the list, isn't it? Again, my computer is slow. Thank you for waiting with me. But basically now, notice what's happening, that, when it comes to the Dow index, to be precise, we are more or less at the same distance from the buy and the sell UFOs. So we are kind of in the middle of nowhere. We are not clearly about to hit those UFOs. So let's say that you wanted to take a trade on a specific stock. Let's say you have a directional setup set on Intel, which is a Dow component. And let's say you are aggressively going to go short Intel. Okay, well, I would say not a very good idea, because if the Dow falls, it's likely going to fall by the same amount that it has to rally. So the UFOs are relatively close. If you take both on the buy and the sell side, again, if I get my calculator back, and you take 80 divided by 30, so you are 2.6 ATRs away from the buy UFOs on average, and 79 divided by 30, you are 2.6 ATRs away from the sell UFO. So there is the same amount of room to move to the upside and to the downside. So this would not be an index that makes me too happy for me to take a trade either long or short. In this case, to be honest, I would like to see more something like that. I would like to see a very small number on the sell side if I want to go short, and a big number on the buy side, so my buy UFOs are very far down, so I got plenty of room for the market to fall. Or the opposite is true. If I want to go long, I will want to see a very small number close to the green UFOs and a very large number close to the red UFOs, meaning that the red UFOs are very far away, so there is a lot of room for the market to rally to the upside. Okay, so these are analysis techniques. Those are little tricks on how you can assess market conditions without having to look at charts one at a time, and get little insights, which are definitely powerful when it comes to understand what's possible out there when it comes to price movement, what is more likely going to happen, what are the profit margins, which have a direct impact on reward and risk, which obviously has to do with risk management, which obviously it's the key together with trading psychology for success in trading, because you may have a great methodology on how to trade, and if you don't manage your risk and your reward, or you don't manage your psychology, forget about it, right? I mean, if you have a good methodology and you don't manage your risk and your reward and the trade psychology, forget about it. If you have a good methodology, it's a good beginning, but still you need to manage those particular components too, right? So anyway, I guess when it comes to the various aspects I wanted to discuss with you guys today, I kind of covered everything was in my mind. I'd love to hear from you guys, even if it's just a quick, this was good today, or this was not too good today, or whatever it is that you would like to share with me, or if you have additional questions, I would love to hear from you on the chat. You guys have been very moderate on the use of the chat today. You don't need to be shy. I mean, it's not like it's the first time that we meet. So I'm sharing with you again one more time the room key. I'd so appreciate that you guys interact with me a bit more. Okay, I understand you may be answering WhatsApp messages on your phone while you're in the session, but let's face it, that's not that serious. So I'd really like you to work with me on that. Cool. Okay. So, okay. Okay, well, so my friends, I think we're going to conclude the session here. It was a pleasure, as always, to join you today, and and have the opportunity to say hi and spend a little bit of coaching time and trading time and market time with you guys. It's always something I enjoy very much. I'm very very excited for the sessions that we're going to be doing on the open meeting rooms. So get prepared for that. And my friends, if you're gonna be shy there, that's it. Okay, so I will not take it. Okay, so I mean I'm joking, but at the same time this is serious stuff. Okay, so let's get prepared to work together on that. If you have suggestions on things you would like to happen on those meetings that we'll do together, please feel free to email me so I know what you're looking for, so we can structure the meetings in a way that is organized. Because again, we don't want it to be kind of like whoever enters first is the one who talks, and we have no organization. So we want to have some sort of a process that makes everybody happy and is helpful to everyone. So if you have ideas or you have requirements, requests, make sure you email me so you let me know. But again, I'm counting on you guys to just show up, not to be shy. Get your camera and microphone ready. Don't show up and be like, oh, but yeah, I got no good lighting. It's okay. We are not here to observe the beautiful traces of our face. We are here to trade together, but also the human aspect, building up a little bit of a team of traders. Keeping each other accountable is such an important aspect of succeeding in trading. So I need you guys to interact with each other in a way that is just limitless, without limiting ourselves. So please do not be shy, and remember that the sessions will not be recorded. They are totally private. Only the people that are there will see what's going on. And by the way, it's not like we're going to have some heavy moderation, but if someone was not to treat the session seriously, obviously, we would have to, again, I hope this never happens really, but we would have to ask that person to leave the room, because the idea is that we get serious about trading during those trading sessions, so everybody can expand in their knowledge, in their skill, in their confidence level, in whatever is it that they do, and and we can be doing that all together. Okay, so counting on you, excited for it. See you next month in the trading review session. See you on the 20th on the first open meeting, and yeah, looking forward to it. You guys take care. See you then. Bye bye.